listed out the most important events, and we can see that there are rather few of them. On Tuesday, we will find out what is the reading for British public sector net borrowing, Canada's core retail sales, and US existing home sales. On Wednesday, the situation will be a bit more interesting. We'll get flash manufacturing PMIs from the euro area. We'll get British autumn forecast statement and US durable goods orders, as well as the FOMC meeting minutes. So Wednesday will be probably the most intense day of the week in terms of their economic data. On Thursday, the US will be on holiday, banks will be closed and not participating in foreign exchange operations. And Germany will release IFO Business Climate Index, which is also an important indicator for the euro. On Friday, there will be inflation data from Japan and the second estimate of British GDP for the third quarter. And this is what we have for this week. Not really much. If we speak about the US dollar, the highlight of the week is certainly the release of the FOMC meeting minutes on Wednesday. I can remind you that this meeting took place on November 2nd, and the Federal Reserve decided to leave policy unchanged, saying that it will watch incoming data and that there is still potential for US labor market to become even better. Still, we think that the main reason why the Federal Reserve didn't raise rates in November was concerns about the outcome of the US presidential race and US election. Now the Federal Reserve is saying that the market has accepted Donald Trump's victory rather fine. S&P 500 is doing rather well. US inflation expectations have increased, and actually we didn't see that kind of shock, that kind of demand for safe havens as it was expected to be. So the Federal Reserve will now have really little reason not to raise rates in December, and as much has happened already since November 2nd, when there was that meeting of the Federal Reserve. The minutes of this meeting shouldn't be a big game changer for the market. We already have comments from the Fed's chair Janet Yellen from last week, which represent a more fresh piece of data. So, in my opinion, you don't have to overestimate FOMC meeting minutes this time. They will probably do little to change the market's expectations for December. So probably US durable goods orders as the main piece of statistical data for the United States this week, maybe even more important for some kind of short-term intraday trading. As for some medium-term trading, I don't think that this piece of data will matter much either. And as for other pieces of data, we have some kind of different and interesting event in the United Kingdom. It is the release of British autumn statement. What is this event about? It means that British Chancellor of, or to put it more simply, Finance Minister, will deliver the information about how about the British budget and the state of the nation's finance. It is an event which happens every year, and probably Philip Hammond, who is the British finance minister, will have to admit the largest deterioration in British public finance since 2011. Of course, this piece of news may affect British pound. It is an event risk for British pound. As the information about this event was published in Financial Times, the market didn't react much to the news that the report will be negative. So probably we won't have a great impact on the currency, but still it should be far from positive. Also, if we look at the data in Great Britain, which were released during the past week, we should say that Mark Carney, the governor of the Bank of England, in his testimony has said that he expects the inflation rate to rise despite the weak report on the latest annual consumer price index. And as a result, if we speak about British pound, we don't think that the Bank of England will resort to easing measures in the near-term future. This is a factor which supports the British pound.